Hello there, my name's Miles Pitcher. Have you wondered, how do I know when it's the right time to refinance? We're going to take a look at this today and we're going to dive in. Just for reference, we are in the middle of May of 2024 right now, and we feel like we've just turned a corner on where interest rates are or starting to improve. So let's look at this today. We are seeing in today's day and age a change in the volatility, meaning the rates have fairly rapid swings up or down because we get news so fast and people are reacting to headlines, the news. Do we meet or fall short of where the expectations are? Some of the things that we're seeing that are affecting our rates. Inflation is a huge one. Is that starting to come down? Unemployment, war, recessions, elections. We're coming up on one. What comments do the Federal Reserve members make? All of those things and many others factor into where our rates move. Here's a chart from January of 2024 through present, and I've just thrown some arrows in here showing some of the big, massive days that have volatility and moves in the interest rates. So it makes it so things just happen rapidly. So in our market, some of the pros of having a volatile market is that rates can get really good really fast. We can get lower rates, lower monthly payments. And when I say better loan terms, that means maybe you're moving from an adjustable rate into a 30-year fixed or a 15-year fixed. Or maybe you did a temporary buy down, a 2-1 buy down, and now you get the chance to get a lower interest rate locked in on a 30-year fix that is not going to adjust higher over the next couple of years. I understand a lot of you are probably in a 3-4% interest rate, but there's a lot of people who have bought over the last 2 years who have just been waiting for this opportunity to refinance. Some of the things you need to watch out for or look at are how expensive are the closing costs. Factor those in as a break-even point. Don't just solely focus on the interest rate and getting enamored with the interest rate. Look at how much your monthly savings are. What does it cost you to do the loan, whether that's out of pocket or getting rolled into your loan. Divide those out and see how many months it takes you to break even on your refinance. We like to see our clients anywhere from 6 months to 12, 18 months on their break even. I like to make sure our clients at least know what those numbers are. The other thing is what happens during underwriting, and you've locked in. What happens if rates suddenly improve after you've locked already? Do you miss out on that? How do you take advantage of that? So let me give you a few tips. Number one, make sure your lender that you're working with has a float down policy, meaning if rates improve while you're in the middle of the underwriting process, can you take advantage of those lower rates? Understand your break-even point. We've talked about that. In this process, have you been in the home long enough to be able to drop your mortgage insurance? Do you have to do an appraisal to do this refinance? The other thing we found is a lot of clients were put into certain loan programs that were not right for them. And part of this refinance can get you in the loan program that saves you the most money. And that may mean moving from a conventional loan to FHA or from an FHA to conventional, depending on your credit score, your income, and where you're at on that. You'll hear a lot of stuff about a no-cost refinance. There is no such thing as a no-cost refinance. Every refinance has some costs associated with it. The real question is, are you paying for that by either rolling it into your loan, paying for closing costs out of pocket, or is the lender giving you a higher interest rate so that they can extend to you a credit to cover the closing costs for you? The closing costs are there, so when somebody says it's a no cost, that's not an accurate statement. We really like to help our clients to where it's kind of a combo of we give a credit to help for some of the closing costs, and then with a refinance, usually you get to skip that first payment. We just ask the client to bring that first payment into closing, and between the credit I can give and the payment that the borrower brings in, usually we can get most of the closing costs covered, so we're not adding a bunch of money into the client's loan balance. If you have any questions, here's how you can get a hold of my team, or just ask us, compare rates, shop around a little bit, or see if it makes sense to do a refinance. Thanks for watching this video.